Good day and welcome back. Today we're going to learn about interpreting entries on a cash book. So this we use when we already have a cash book that is created and you need to find out what the transactions are so you can see if the calculations and everything are correct. We normally use this on a day-to-day basis for accounting when we take over someone else's books and we need to double check that what they have entered is correct. Okay, so let's start. First of all, we need to find out what month and year is this transactions following. It is April 17th. So here you write transactions for April 2017. And then we work according to dates. We know that previous exercises is we normally work from 1 until the end of the month, until the 31st or the 30th. So here we do exactly the same. So we look here for the date that has 1 on it. That's the smallest date. So our first date is balance. You see that balance over there? That's our first date. So we write here, but first we have a balance brought down. So I'm going to use a lot of short languages or short words. You need to write them out when you are answering your questions, but this is just to help us with the video. So balance brought down, cash is equal to $300 and bank is equal to 2,500. Remember your Namibian dollar symbol or your rate symbol. Okay, so then we go to the second transaction, right? So we have the first, then we go to the second. We see here there's a document number, which is a receipt, okay? And there's a capital installment of 36,000, which means the capital increased with 36,000. So we say the second here, we say the owner deposited or increased his capital with 36,000. Oh, sorry. 36,000. Receipt number 11. Okay, so that's it. Okay, and also we need to remember that where did he increase his capital? Did he increase his capital on cash or at bank? At bank, isn't it? So, you can say the owner increased his capital with 36,000 with EFT or by depositing money into the bank. Okay, and then the receipt number 11. Then we go over to the third. So here we have 1, 2, but here we have the third. So then we go there. We know it's a credit transaction, so we write there 3. So what happened here? So credit transaction, which means our money went down. We used money for purchases. We bought it by the bank. And we have a proof of payment number 11. So we say purchased goods and paid by EFT, proof of payment 11 Namibian dollars, $2,000. Okay, then we go to the next one, third. There's no fourth, so there's a fifth, and we have a contra account here, which means we have a deposit happening. Okay, so our cash went down, but our bank went up. So we deposited money, and we have a deposit slip 1 as our reference number. Okay, so we have on the 5th, we have deposited money into the bank. Our value is $300 and our reference number is deposit slip 1. Okay, then we have, let me look for number 6. There's no number 6, no number 7, no number 8, no number 9. There's a 10. Okay, and here we have a cash register roll 11, which means we have sales. We received cash for things sold. Okay, so we have the 10th here. We say cash sales as per cash register roll number 11 to the value of 1,400. Okay, then we look for the next one. Okay, so we see there's 20, so the next one would be 16, isn't it? Okay, so the 16, we think here there's a bank slip. Okay, we have 16th as a date. Rent received, so we received rent into our bank account. Okay, so we write here 16 EFT received for rent. How much was it? $800. Okay, then we look for the next one. Next we have the 20th. So we see that all our debit transactions are now completed. We can just focus on the credit transactions. We have the 20th. What's happening on the 20th? There was drawings. So the owner withdrew. Remember, drawings means the owner withdrew money from the business. Okay, so the owner withdrew money from the business. How much? $400, and we have a proof of payment 12. So owner withdrew money from the business. Just see. Hold on, we skipped one. Sorry about that. That's where we need to double check our things, ne? So on the 20th, here's a cash float of 450. Okay, 20th, withdrew money for cash float. So we have withdrew money for the cash float. How much was it? It was 450. And then on the 24th, that's where our drawings comes in. So I mixed up the lines a little bit. Okay, so the owner withdrew money for personal use. We use the document number, sorry, POP 12. Okay, and how much was it? It was $400. Okay, and our next transaction is wages. Okay, there's no document number, and the amount is 200, and we withdrew it from the cash. So the owner took, or we paid the wages with cash. So that would be on the 25th. Paid wages with cash. Value is $200. Oh, my spelling is again phenomenal. Let me just fix this quickly. Sorry about this. My dyslexia is pulling in beautifully. Okay, so then we have the 27th. 27th, we have a proof of payment number 13. We paid water and electricity with $1,200. So paid water and electricity, sorry, by EFT, using proof of payment number 13, and the value is $1,200. Okay, then we have our second last transaction. We have the 30th where we paid salary. Remember, there's a difference between wages and salary. Wages is for casual workers, which you do not have contracts with, and salary is with permanent workers, which you has contracts. Okay, so on the 30th, we have salary. So paid salary. How do we pay it? By EFT. By EFT. Then we write the proof of payment and we put the value. The value is $3,000. Okay. Then we're going to finish up now. We still need to put the balance. So we close off our cash book and we have a balance carried down. We have a balance carried down on the 31st. So balance, remember that's what that CD stands for, is carried down. Carried down. Cash equals to 1,200 and bank equals to 32,550. Hold on, forgot my rate. Okay, 32,500. There we go. Okay, and that is how we do this. So when you have a cash book and you need to figure out what these transactions are and to make sure that they actually, make sense, you need to be able to pull the information from this and move it back to transactions. And again, you need to be able to put these transactions back into the cash book. Okay, so that's how we double check our work to make sure, not our work, but other people's work that we receive as we are accountants. Accounting is quite nice. It's just figuring out and building a puzzle and building a house from the bottom up. Hey, so enjoy this. We'll see you again next time.